Good morning, traders. Welcome one, welcome all to the Pirate Traders live stream. My name is Charles, and I'll be your host. Today, we're going to talk about the ES, the NQ, and the two-way auction process. And I'm telling you, today's going to be a doozy because it sets us up for a great learning opportunity. First things first, we have a gap down this morning. So the first order of business for the market is to try to push back up to yesterday's low, filling that gap. So that gap is to 47.97. Obviously, by yesterday, I mean last week. So yesterday's low is where we would look for the market to have resistance. If we got resistance if we got selling at yesterday's low, we would look for continuation lower to head down and test the balance area low at 47.60. Okay. If the market went up and it filled the gap and there was no resistance, then we would look for it to continue up into the range from last week. And we basically just take every possible resistance level above one by one and just ask ourselves, where is the market going to get smacked down? No matter what, really the market getting smacked down anywhere inside this overnight range is bearish for us to head down to 47.60. Okay. And why is that? Well, that's because we understand the auction process. The market has been in a balancing area for a while now. That balance area looks something like this right here. You can see we entered, we went to one end, failed to continue higher, then fell to the opposite end. We then took another poke at breaking out. And then at the end of the week last week, we failed once again to break out, increasing the odds we're going to do this move right here. The market is going to work its way straight to the opposite end of balance. So what did it do yesterday once we pulled? Again, when I say yesterday, I mean last week. When we pulled back into the range, it spent all the time and brought in all the volume back inside the range, increasing the odds that it was heading to the balance area low. And then what did it do this morning? It gapped down, further increasing the odds it's heading to the balance area low. So in my mind right now, the highest probability for where the market is going bigger picture over the next few days is to 47.60. Now, once we get there, who knows what happens, right? Maybe the buyers step in once again, as they have in the past, and the market turns around and it makes new all-time highs, right? Maybe that's possible. But I do believe it needs to come back down there again before it's going to do that. To me, the higher probability for the market, again, over the next few days, is to pull back to 47.60 rather than to head up and make new all-time highs right away. The thing that will convince me I'm wrong is if we can get back above the balance area high at 48.25. Okay? You could call that, if you wanted to be a little more conservative, the overnight high at about 48.28. If the market can work its way all the way back up there and it finds new buyers up there, well, then I'm wrong. And we're looking for continuation to the upside. And it's a bull market, baby. And we'll get super excited. But in my opinion, the higher probability is that the market will get smacked down somewhere in here and head for that balance area low. Where will that smackdown take place? It's hard to know exactly. Will it happen today? Will it happen first thing this morning? Is it happening right now? Well, that's what we got to figure out. That's the next step. So the first question we're asking, can they fill the gap? Can they get to yesterday's low at 47.97? If they cannot, well, that's a gap and go, and they're heading for the balance area low. If they fill the gap and they get resistance there, well, that's a gap and go, and they're heading for the balance area low. And if they don't, if they pull up into yesterday's range, we're just looking for resistance. Anywhere it could be. That is how I will be trading throughout the day today. Looking for sellers. Okay, so far it is a gap fill attempt. So far the market is saying it's more likely to try to fill the gap rather than gap and go. But they are now building support above the halfback and above the opening price. So that tells me thing number one, we're likely to fill the gap. But thing number two, if it fails and it pulls back through that opening price, there will likely be a lot of stops down here below the A period low. Anyone that's going long right now, that's where they're putting their stop. So if we pass through the opening price, I would assume we're heading for the overnight low around 47.77. But as long as we hold above opening price, I assume we're filling the gap to 47.97. And we'll just watch the market play tug of war between the opening price and the gap fill and see which way it breaks. All right, so moment of truth for those buyers. All their stops are just lingering right below that opening price. They got to hold it here, or we'll probably head down and test the overnight low. Oh, looks like we're going for the overnight low. All right, so we're looking to test 47.77. This is now a gap and go, which is bearish to see. So I now remain bearish as long as the market is below the opening price. So there's sort of two things that could play out here. One, the market pokes below that overnight low and fails, pulling back up through the opening price, in which case I assume we're heading for the gap fill. Or it pokes below that overnight low and it gets new selling there, which is bearish for continuation lower. So once again, I am bearish as long as we are below the opening price. Pulling back up through it increases the odds of a gap fill. Whoops. Now we have a lot of liquidity sitting around 47.75 in the order book here on Bookmap. That will give us a good clue of what's going to happen at that overnight low. Are we going to get a look below that fails and pulls back up through the opening price? Or are we going to get a look below and go with new selling for continuation lower? If this liquidity completely disappears, just poof, the second we get there it disappears, that will increase the odds that we bring in new sellers and continue lower. If it holds and it really fills and it is real support, well, then it will increase the odds of a look below that fails and pulls back up through the open. Let's see what happens. All right, Ooh, we're almost at the overnight low. To spoof or not to spoof? That is the question. Good morning to Will. Andrew. Andrew says, balance, balance. You nailed it, my friend. We pulled back into the balance at the end of last week, setting us up to head to the balance area low, and then we gapped down this morning, increasing those odds. This is exactly what we would expect in balance. Holger says, Guten Morgen and Happy New Year. Happy New Year to you. Happy 2024, everyone. Welcome. Sorry, the market had me in the zone talking market generated information right from the open. Good morning, everyone. Happy New Year. Glad you're here. Let's have some fun. It's a gap and go. Good morning to David G. Happy New Year, Frito. Pedro in the house. Good morning to you. Bronco is here. Jack W. Scooball. Nap. Bust a Move. Jay. Tim. Debbie B. Sebastian. 200 Dogs. Malang and Macvins. Welcome, welcome. Oh, also worth taking a second while we poke down to test the overnight low here. Worth taking a second to let everyone know we got a discount going, a promo code on the workshop that kicks into gear on February 5th. And that promo code is Happy 2024. So if you are thinking about signing up for the workshop in February, about a month from today, or a little over a month from today, this week only, 30% off with promo code Happy 2024. Link in the description. Still poking away at this overnight low. Looks like they're going to put a bot right there. Little iceberg action. Convince some people that they're making a double, triple bottom down here. Get a few more stops before they come back for it. Welcome, Philip and River Rock. Scooball says it's weak. Yes, very weak. You mark my words. You get a gap and go that goes straight to the overnight low, reverses exactly one tick from the overnight low with an iceberg. It's weak. Okay, so we're watching this liquidity down here. This little area, this node. What happens to that as price pokes below the overnight low? Does it poof? Does it just disappear? Or do they let the orders fill? All right, so there's your double bottom. Anyone that's going long right now has their stops building and building right below the low. So as long as we remain below the opening price, this is even more bearish to see that they're going to come crashing through that overnight low, taking out all these buyers. Right, y'all? The buyer's buying right now. All right, they made it a double bottom. Do they make it a triple bottom? Or do we poke through? Do they think they can get some more people long here? Or does the market finally break? Oh, it's going to break. There we go. Okay, so now let's watch this liquidity. What happens? Does it disappear or does it get filled? We are also now looking for resistance at the overnight low. So if this liquidity just magically poof disappears, that increases the odds the market will head lower. If the market comes back up and it pushes into the overnight low and that becomes resistance, that increases the odds the market is heading lower. Bearish. Man, what is up today? Okay, so far this liquidity is acting as support. Looks like we're going to get a little bot shenanigans here below the overnight low. A little grinding around between probably 73 and 76. But that's to give the market a chance to fill these orders. Seven says, what's going on with Bitcoin? Man, Bitcoin's breaking out. That's what's going on with Bitcoin. Bitcoin's on a breakout. Yeah, it's doing its thing, man. Look at that. Look at that. Balance. Breakout. So any other asset in the world, I would say look for it to push up, come back down, test support, and then you step in and buy support. But knowing Bitcoin, once it breaks out, straight line. So I think 48 is in play. Break out. Chop, chop, chop all morning long. Chop, chop, chop while I sing this song. Gonna grind the market into liquidity. Gonna find out if it's buyers there for me. Okay, so we're seeing a pink node of volume starting to pop up down here. What does that tell us? That tells us that there is new business taking place below the overnight low. Okay, so coming to the overnight low gave us a chance to squeeze any of the buyers. Okay, or sorry, gave the sellers that got us down here in the overnight a chance to take profits at that overnight low. And the fact that there is new liquidity, new business happening in the market below there tells us that we have new sellers entering the market, which is bearish to see. I'm just going to click over and take a quick look at the market internals to verify this. So you could see the market opened obviously very bearish on the ticks because we had a gap down. They were able to recover that momentum back to the zero line on both markets, but then got smacked back down. So that confirms the new selling, which are those wicks you see above the zero line. That is the new selling. That is bearish to see for continuation lower. So we may have to do some grinding here to fill all this liquidity around 73. But I think they're going to break lower once they do. Okay, round two. To spoof or not to spoof? They held it the last time. They let it fill. Will they do that again? I'm looking at you, 73. Man, this is absolutely beautiful. Textbook work by the bots this morning. They did it at the overnight low, and they're doing it again now at the current low. Fake double bottom, using an iceberg, gets the market long, puts their stops right below the low, pulls out the rug, takes those stops out. Too many emotional short-term traders this morning. Getting squeezed too easy. Shenanigans. All right, so the next major resistance is going to be the halfback at 47.8150. We're testing it right now. This should hold for resistance to head back down to the low. If it does not, and the market turns around and continues back up through the opening price, well, then my bearish call is wrong, and the market is looking to fill the gap. Oh boy, we're dancing right on it. Dun dun. Dun dun. Of course, weak high. Okay, there you go. All right, so this changes everything. What's the correct banner? Yeah, there it is. Charles is feeling neutral. Okay. So essentially now what this means, the fact that the market looked below that overnight low, the liquidity held as support. We'll talk about this iceberg in a second, but the liquidity held as support. Okay. And then we pass back through the opening price. That now makes this a look below and fail of the overnight low, which increases the odds that's as far down as the market has to go. It just made its low. Now, it doesn't mean it can't come back for it later on in the day, but for now, for this moment, for the tug of war that's happening at 10 a.m., that's the low. It just made the low, and it's happy with that low. So then what becomes the most likely place for the market to go next? Well, where are the buyers that bought in here? Where are they going to look to take profits? Most likely either in this node that we're testing right now for resistance around 88 or the gap fill. So I am back to a neutral state and I'm watching the market and I'm trying to figure out where does it get resistance and what comes next. Okay? Why am I not bullish? It's a look below and fail of the overnight low. Why am I not bullish? Because of the larger context of the balance area. Because I know the highest probability is that the place the market is going is 47.60. We thought maybe they would go in a straight line this morning. If they could have held that overnight low, they could have gone in a straight line. But now that we got the look below and fail, all that tells us is we're not going in a straight line. But it does not tell us the market is going to turn around and head higher. We could just as easily spend the day going sideways inside the overnight range and go nowhere. So the next thing I got to figure out is what is happening here today. Are we just looking for resistance to quickly poke us back down, or are we about to spend a whole day going sideways? Looking for resistance and watching the ticks. All right, Charles, I hear you. We don't know what's going to happen. Well, what would get you bearish? What would get you thinking we are definitely heading down again? If the market gets below the overnight low once again, and it holds this time. So that last time it looked below and it failed. It pulled back up. If this time it can hold, that gets me bearish once again. So either resistance at the overnight low or a gap fill and resistance there. And I'm bearish. And the iceberg at the low, the last thing we didn't talk about. So yes, this does count as this liquidity holding a support. Okay. It does count as a look below and fail of the overnight low. Both of those things take away the bearishness, right? But the fact that they left that iceberg behind at the low, as long as it's still there. Now, it could disappear at any moment. Whoever has that order in could just pull it from the order books. But as long as that remains there, it increases the odds that whenever the market finds resistance, it'll come back for that low once again. One more reason not to get bullish, even if we've lost a reason to be bearish, at least short term. Question mark says, can we look at the NQ? Yeah, let's look at the Q. Oh boy. All right, well, first things first, I'm going to change my settings on my chart here from 2-tick increments to 4-tick increments, which means, excuse me, each letter that you see is going to represent 4 points for the NQ now. I'm just going to compress the size of the profiles to make them a bit easier to read, as there's some volatility in the Q as of late. All right. So essentially, the NQ has just been ahead of the ES. It was ahead of the ES on the momentum up. It was ahead of the ES on the rollover. And now it is already ahead of the ES on the test of the balance area low. So they tested it in the overnight last night. They failed, went straight from one end of balance to the opposite end. They did it in the overnight. So let's just walk through that mechanism once again so everyone understands. The market had momentum. It ran out. We saw that as a potential balance area high. The market failed back down, found support, and turned around straight back up. So we now assume that's a balance area low. Okay? The market tries to break above the balance area high. And at the end of the week, last week, it pulls back into balance and then spends the rest of the day inside balance, spending time bringing in volume. The overnight range tries to test that balance area high, cannot test it, straight to the opposite end of balance. So this is exactly the mechanism that caused this move in the overnight. That's the same thing we're looking for in the ES today. So the NQ is just one step ahead of the ES. Okay, great. So then what's happening with the NQ right now? Well, they opened at the opposite end of balance. They opened at the balance area low. So if there were buyers for the NQ, they should have been able to instantly turn around and start heading back up to the balance area high. They already had the look below. They could have turned it into a look below and fail. Like that right there. But what did they do instead? They pushed below that overnight low, and they are now spending all their time and bringing in all their volume below there. So that is a sign that the market, the NQ, on a day time frame, on a longer time, or sorry, like on a weekly time frame, is not going to balance off the excess with time. It is more likely it's going to balance off the excess with price. So that's very interesting to see. That makes us want to step back and take a look at the daily and get a little bit of perspective. So you could see what I was just talking about was this balance area in here. You could also see this as a larger balance over a multi-week time frame. If that's the case, you're at a balance area low right now. But pretty much any lower from here, and you need to start heading back to repair the weakness you left behind on the way up. You got weak references, you got poor lows, you got gaps that need filling. Uh-oh. They start to become targets. So I would say the NQ is bearish. Intraday today, I would remain bearish below the overnight low. You do have some low volume nodes there, so they are likely to try to come back up and test that overnight low for resistance. But if it holds, very bearish to see for continuation lower. And I would be wrong if the market pulls back up through the opening price. If the market pushes back up through the opening price, then all this was a look below and fail of the balance area, and you look to head right back up, okay? But resistance at the overnight low, very bearish, and pretty much anything below the opening price, bearish. For continuation lower. Dun, 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 dun. Okay, so I'm going to say the half back instead of the opening price just to give it a little more breathing room. But if the market passes through the half back now, that is the second gap and go for the morning. That is the second attempt for the buyers to fill the gap that has failed. That would be bearish to see. Dun 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 dun. Nope, it's holding. All right, more chop. Bullish. All right, so as this tug of war continues and the market tries to decide what it's going to do today, are we heading straight down for that balance area low, or are we going to go sideways today? These are the areas I'm watching. So between 79 and the gap fill at 97, that's sort of a neutral zone where they'll just keep playing tug of war. But if they, well, here we go, back through the half back, that's bearish to see. So now if they get back below 79, I'm bearish again. So neutral zone, bearish zone. Let's see what happens. Screwball says gap and chop as usual. Good call. Gap and chop is the new norm. Debbie says, Charles, market is still out of balance because it is below the previous low, correct? Incorrect. The market is right in the middle of balance right now. Now, unless you're asking about the NQ, that is below balance, yes. So we'll just zoom out here. So the ES is right smack. This is the balance area. It's right, well, a little bit lower than halfway. Okay, heading towards its low. Whereas the NQ already clearly surpassed that area first thing this morning and is just breaking lower, right? So what do we always say? We say balance leads to excess, excess leads to balance, right? So we had balance for multiple weeks down here in this range. This is the NQ, okay? And then we broke out and the balance led to excess, okay? So then we created a balance area up here. And it just so happens, oh no, we're breaking out of that balance to the downside, which is likely to lead to excess there. Bearish to C. Bearish to C for the NQ. But the ES is a different picture because it's still in the middle of that balance area. So it could chop and chop all day. Okay, so take all the context that I've been talking about, on a daily range about support and resistance and balance. Now let's talk about it on a minute by minute, second by second range. We've now entered what we call a bot shenanigan zone. You can just see there are icebergs on both sides of the market, all over the place. When we see this, it tells us that the market isn't really going anywhere, that they're just pushing it up to squeeze some buyers, pushing it down to squeeze some sellers, squeeze some buyers, squeeze some sellers, squeeze some buyers, and just kind of play tug of war in a specific tight range. So generally speaking, once it gets into one of these shenanigan zones, what you need to wait and see is when does it break out? And whichever way it breaks out, that will tell you what comes next. So the way you can tell when it breaks out, obviously, step one, price breaks out of the range, right? And two, you stop seeing icebergs. So it just kind of goes without a bunch of icebergs everywhere. But as long as you keep seeing icebergs at the upper end of the range and you keep seeing icebergs at the lower end of the range, they're just going to keep chopping it up. Bot shenanigans. Kunk says, I like this technical term. This is the term, okay? All the important people on Wall Street use it too. T. Craig says, what's the window at the bottom of the Bookmap? It's a good question. I didn't even notice the stops and icebergs have been pulled from there. But that is the cumulative volume delta. So it's just letting you see the current order book volume. Is it more buyers or sellers? So when it's above zero, it's more buyers. When it's below zero, it's more sellers. I don't pay a lot of attention to it, to be honest with you. Huh. Anyway, I'll figure that out later. But yep, cumulative volume delta. All right, so we are breaking out of the bot shenanigan zone, meaning the market should be able to make a move. Since we broke out of the low of the bot shenanigan zone, that increases the odds. The market is making its move down to the low. And that makes me bearish once again. Bear. Bear. So I am now once again bearish, same as before, below the opening price as a second gap and go. Let's see how far they can push it. Couldn't push it very far the last time, but now they spent a little more time chopping. Maybe this is all they needed. And you say to me, Charles, how is it that you can make a call and have it not work out and then make the same exact call an hour later? Well, that's how trading works, folks. That's what the market does. It plays games with you, and it may give us another look below and fail. It could do it again in the C period. It could pull right back up through the opening price, try to fill the gap, fail to do it, come back down. I mean, it could chop like this all day. But we know that as long as it is a gap and go, the highest probability is that it is heading lower and that it is, a look above and fail of the balance area, which means the higher probability is that it's heading lower. So if we have to pick a side in the game of tug of war, we want to be picking the bearish side. And we don't know how long we'll have to play. But we know where to enter to minimize our risk and maximize our potential opportunities. Malang says, what is the white dash line, VPOC? It depends which one. There's a lot of white lines here. Just like my apartment on New Year's Eve. All right. So you got the halfback right here, which is on the market profile chart. That is just halfway between the high and the low of the range. And if you're looking at these white lines over here, that is the VWAP, the current VWAP on the Bookmap. Truman says, did the NQ do bot shenanigans by getting people long after a big drop and then dump again? Yes, sir. It's the same thing the ES did. So they gave the market the look below and fail, right? Boop, boop, look below and fail. So any trader worth their weight in gold knows that that's a bullish signal, that the market is going to try to go higher. So then what they did was they just grind and grind and grind and grind right on top of this node right here at 47.78 because they know traders think that's the support. And so all this grinding, that was just bots pushing it up, pushing it down, pushing it up, pushing it down, pushing it up, pushing it down, pushing it up, pushing it down. It was getting short-term traders long. There were traders that were convinced that the gap was going to fill, and they were getting long. Well, where would you all suspect their stops are? Right below that A period low. Well, where is all the liquidity that wants to fill? Right below the A period low. So the shenanigans were just to get more people long, so there would be more liquidity to squeeze. Those bastards, like clockwork. All right, so we just created a poor low here in the C period. That increases the odds the market will push away from the poor low, looking for resistance, but then come back to repair it. It's also worth noting this iceberg has been here the entire time. If you'll recall, after the market ran away, I said the fact that it was still here increased the odds it was a magnet for price. Well, the same thing is true right now as the poor low is created. So we get the push away, but higher probability we're coming back for it any minute now. Scooball says, I feel like a lot of gap fill traders. Sorry, it's covered up by a little thing. Sweet right now? I think you mean sweep right now? Yeah. That's what I'm saying. Anybody who just went long here in the B period, all their stops right at that A period low. And all it's going to take is that one little poke. Boop. But maybe that's what they need, because maybe they really want to fill this liquidity. Let's wait and see. Oh, how do I do that? I can disable the little heart thing? I fucking hate it. It always blocks part of the text. Holy moly, you guys. Just bouncing on a single tick. Come on, market. You can do it. Man, somebody just got long 1,000 contracts. And it spoofed. Did you guys see that? Look at that. Instantly it disappeared. As soon as they broke through that iceberg, all that liquidity that's been sitting there the whole freaking time, poof, gone. It was all a game. So that increases the odds. The market's going to break lower. Bearish to C. The low remains poor. There it goes. Gone. Liquidity just poof. Just kidding. The low remains poor. Round 3. It's worked the last 2 times. All right, so normally at this moment, I'd be seeing this as a second look below and fail of the overnight low, which would be taking away my bearishness. But because of all the context we've discussed, I'm still very, very bearish that we're coming back for this poor low. So I will even let them poke above the opening price just a little tiny bit, just a few points, and I'll still remain bearish that we're heading back down for that low. But if we start to get above 84 and spend some time up there, well, then I'm wrong, and we're heading for a gap fill. So looking for the market to get smacked down to repair the poor low. DNK says, it's not trending lower as C is still not 2 ticks below A. Correct. The poor low means we are still inside the initial balance. We have not actually begun trending yet. But of course, that the higher probability is that we will trend lower once we do. I don't understand, Charles. Why? What does that have to do with anything? Well, we know several things. We know that the market almost always does some tug of war in the first hour, creating an initial balance. We know it almost always breaks out of that initial balance, like almost always. And that once it does, it tries to get continuation in that direction. So then we start to say to ourselves, well, which of the two is it more likely to break? Is it more likely to break the high, or is it more likely to break the low? Well, it's had ample opportunity to get back above the high, right? We had a gap right from the opening price. They could have continued higher and they couldn't do it. We had a look below and fail in the B period, giving them a second chance to head back up and fill the gap. Couldn't do it. Both of those times, it brought the market back below the overnight low. And both of those times, we brought in more volume and spent more time. So it is safe to say we have a good high, at least intraday for the moment right now. Good excess, good taper, and a retest. But we have a poor low. So the market has told us it doesn't need to do business up here, and it is telling us it needs to do business down here. So that increases the odds of a break lower. But I can't tell you how long it'll take. Just which way is the higher probability. Good morning to Noor. Welcome. Mike says, what's the difference between ADD and ADSPD? Really, there is none. The ADD is the full index. It's every single company that trades on the Nasdaq. I'm sorry, on the NYSE, the New York Stock Exchange. And the ADSPD is just the stocks that are in the S&P 500. But honestly, they are pretty much the same. Frito says, am I able to see the YouTube link? No, unfortunately, if you guys post links, it doesn't show them. But now that I know I can Google it and find a way, I'll look it up. Thank you for the heads up. Oh, or you can email me, even better. Mike says, wishing you a happy and successful 2024. Me too. Wishing a happy and successful 2024 to you, which is an excellent reminder. Markets in Mind workshop. Learn to trade like I do. So for those of you that have been following me for a while, you know I put together these workshops called Mastery of Markets in Mind, which is a complete education on everything that you need to know to be able to trade the way I do. I got one coming up next month in February. And if you want to save some money, head on over to marketsandmind.com and sign up today using promo code HAPPY2024. Save yourself 30%. So that you too can have a happy and successful 2024. Jay says, how's the Bronco doing? Good ride? Yes, I love it. I love it more every day. I'm so happy. I was debating the, Wrangler versus the Bronco back and forth and back and forth and back and forth. And I finally pulled the trigger, and I'm so happy I did. I love it. Alyssa says, I'm a great teacher. Thank you. Appreciate you. Jack says, if you like this stream, take the workshop. It's well worth the money. That is what they all say. I get that review a lot, that it is well worth the money. But you bring up another point that I think is worth mentioning. If you like this stream, you should push the like button. We got 150 people hanging out and only 35 likes. Come on. Give me a little thumbs up, little thummy thumb for the pirate. Thank you, guys. Paper Demo Guru says, can I trade you my OnlyFans sub for the workshop? The answer is yes. Email me. I'm always happy to take on a new OnlyFans sub. Okay, so as we print the D period, we remain inside the initial bounce. Still got that poor low, acting like a magnet. Bio says, do you live stream every day? Yes, I do. I got a community called Pirate Traders who can join the brigade for just $10 a month. And then you can see the live streams every morning for the first hour of the day. Gunk says, does the thumbs up matter on the private stream? Brother, we're on public right now. The whole world is watching. Put some pants on, for God's sakes. Fred. I mean, I guess. You gotta try everything once. So you say, Charles, if the market knows it's going somewhere, if it knows it's either going to break lower and head down for that weak reference at 47.69, or it's going to break higher and look for that gap fill, why, oh why, does it spend so much time grinding around that overnight low? Why do they just keep grinding and grinding? Well, they use time as a mechanism to get you into trades. So that might be if you're flat, you're so bored with anticipation for the break that you just have to get in a trade. Or you're in a trade and you're just so tired of it not breaking, whichever way you think it will, that you just get out of the trade to make the pain stop. That's how they use time to get you in and out of trades. So as much time as they can, they'll just keep grinding here and getting traders long and getting traders short and getting traders long and getting traders short and getting traders long and getting traders short. Joe says, I took the most recent of Charles's workshops. Just excellent. Well worth. Final evolution if I am profitable in 24. Also, I ate cabbage yesterday. It's a great point. All right, so here we go. Coming back up to test resistance once again. As I've said, I'm bearish pretty much anywhere here below 85, as I think they may just poke above the opening price and then come back down for the low. That's some bot shenanigans right there. T. Craig, appreciate you, brother. Michael says, what are your settings in Window Trader for the volume bars to turn darker colors? So the volume profile is based on whatever the time frame of that profile is. So over here, it would be the profile for the day. And in here, it's the profile for the current 30 minutes, the current 30-minute time period. And the red is the highest 30% of volume. The pink is the middle 40% of volume, and the white is the lowest 30% of volume. So it's just adjusting, second by second, tick by tick, as those volume levels change in comparison to the rest of that time frame. DNK says NQ had cessation. NQ had cessation. You are right. Well, that's interesting. Again, please remember the NQ and the ES are different markets and they do their own thing. So the NQ is giving us a sign that it just made a good low because we came back up and we got cessation of that trend to the downside. However, the value area, the blue box that you see here, is still up against the low of the day. So that is a little bit bearish to see. So if I was going to trade the NQ, I'd be very cautious right now. The cessation of the trend would tell me not to be shorting because we may just be going sideways the rest of the day. And the value area being at the low of the day would tell me not to go long, because we may be coming back for the low. So if I was trading the NQ, I'd be stepping aside and waiting for more information here. However, the ES is not the NQ, and it has not broken out of its initial balance yet. So it still has a higher probability of repairing the poor low. It just means we may go sideways for a while first. Thanks, NQ. All right, so in my opinion, this is the lowest risk area to get short for a repair of that poor low. I know it doesn't feel bearish right now, but remember what I said. The market has already twice tried to head higher and fill the gap, and it couldn't do it, but it left behind weakness at the low. So the higher probability remains a test of the low before a test of the high. Now, I could be wrong. I could always be wrong, but this would be the area with the least risk. Michael says, do you look at the bracket statistics at the bottom? I do. It's merely just to give me an idea of what the overall liquidity is. So what this is showing us is each 30-minute time period, how much volume trades in that time period. And then it compares it to a 10-day average. And then it shows us the delta between that. So it just makes it easy to see, are we bringing in the same amount of volume we normally trade around this time of day, or is it more, or is it less? I don't spend a lot of time looking at it, but if I'm asking myself the question, are we bringing in volume? That would be a good place to look. All right, well, I don't know how long the chop will go. I couldn't possibly tell you how much longer they are going to continue to chop around right here at the overnight low. But I still believe the highest probability is that we are heading down to repair the poor low. And that once we do that, that will cause a liquidation, taking the market lower. And that all of this chop is just building up that momentum. They are just winding back that spring tighter and tighter and tighter. They are just pulling that rubber band back, stretching it out and stretching it out. So it could break either way, but to me, the higher probability is still a break to the downside. But it looks like we're going to have to sit through a lot of grind first. So I'm mentally prepared for that as they chop it up. All right, well, it's that moment of truth. I must admit, I am wrong. This is not heading for the poor low. They have now had opportunity after opportunity to head back down there and repair it. So I think we are set up for what I would describe as the single most frustrating type of day you could possibly have, which is balance inside of balance inside of balance. So we are now in the middle of a balance area. Okay, this larger balance area right here. And we're playing tug of war right in the middle, and neither side is winning. So that means the tug of war must continue. We are likely to go sideways the rest of the day. But not only are we likely to go sideways the rest of the day, it is likely to happen in a completely bot-controlled environment like it has been all day, which means every move will be frustrating like it has been all day. So it's going to keep making you think, oh, gap and go. We're going lower. We're going lower. Just kidding. Nope. We're going back up to fill the cap. Nope. Just kidding. Going lower. Gap fill or gap and go. Gap and go. Oh, nope. Just kidding. Coming back. They're going to keep doing it like that in this very exact way all day long, where they keep taking the market to an exact place where they could reverse it and then reversing it, and then the exact place and then reversing it. So we are setting ourselves up for a very frustrating day. So what am I assuming now? Well, I'm assuming we're going to head up and create a poor high, because why not, right? If you're going to do it in the most frustrating way possible, they would create a poor low, then they'd come back up and they'd create a poor high, and then they'd come back down for the poor low again. So I suspect that is what is going to happen. Whenever we break out of the initial balance, that is either getting a point above the A period high or a point below the A period low, whenever we break out one way or another, I would look for a little move. So a break of the low could test 69, or a break of the high could fill the gap, but then likely and probably almost exactly, it will then reverse and come right back down again. So I think we are set up for a very, very choppy day. Yay! Sounds fun. Another thing that's worth mentioning that's a little bit frustrating here today, we're getting contradictory signals from price and the market internals. The market internals are basically showing us a recovery from the momentum down in the overnight and then just sideways from there, whereas price action is telling us further momentum down. So that's just another reason for sideways tug of war here inside the initial balance. It's a chop zone. Yay! Supremacy says, do you have a video sharing the software that you are using? I don't have a video, but I do have a website that explains everything. So if you just head over to marketsandmind.com, you'll see the website looks a bit like this. You just scroll on down. And then you'll see this thing that says the tools. This is the software that I use. So there's the market profile software. That is the one you see over here on the left. There is the Bookmap software. That is the one that you see on the right. There is the market internals. That is what you see in the background right here. And then there's the candlesticks, which is what I flip back to from time to time when talking about the daily, weekly timeframes. So if you go to the website, marketsandminds.com, and you click on any one of these, it will go in depth explaining what it is, how I use it, how to set it up to look like mine, all of that. Marketsandmind.com. All right, ladies and gentlemen, that's it. They broke the initial balance to the upside, so that increases the probability that they are going to try to fill the gap now, heading up to 47.97. I will be looking for resistance there on a gap fill as a sign that the market's going nowhere the rest of the day. If they start to pass back up into yesterday's range, it remains bullish as long as the market continues to one time frame higher. So I really just want to put this into context for those of you that are newer to the channel and maybe don't understand what's happening here today. So there's multiple different time frames to look at the market. What is it doing this week? What is it doing this month? What is it doing today? What is it doing over the next 5 minutes? These are all different time frames. So on a daily, sort of weekly time frame, the market is still heading down towards the balance area low, and all of the time and all of the volume that we spent this morning further increases the odds of that. Okay? But shorter term, intraday today, it is not going down there anymore. It is heading back up, looking for resistance to come back down to it. So what does that mean for today, the rest of the day? That we will likely go sideways. So the market will push up. I can't tell you where it'll get resistance. It might be at Friday's low, 47.97. It might be around this node right here, 48.08. It might be up here somewhere in this range between, say, 48.14 and 48.21. It could be anywhere in there that the market finds resistance. Once it does, so the market will trend intraday today. Each 30-minute time period will continue to make higher lows as far up as it can go. And I don't know how far that will be. But once we get cessation of that trend, once one of the TPOs, 30-minute time periods, dips below a previous TPO, making a new low, that will tell me that the momentum up is over and the market is going to go sideways the rest of the day. At whatever point it comes back down for today's low, which it absolutely will because it is a poor low, it'll come back for it. Whether it happens today or tomorrow or the next day, it will come back for the low. And whenever it does, new selling there will target the balance area low at 47.60. So over a daily sort of weekly time frame, it is still very bearish, but intraday today, it is actually bullish that we need to head higher looking for those sellers to get us back down. So we are trending up, and we will assume the market can keep going up as long as it continues to trend. With that, I will say farewell. I will wish you all the very best. And if you are a member of the brigade, I look forward to seeing you tomorrow morning in the live stream. Once again, I will just say, if any of you have been following me for a while and you've been thinking about taking a workshop because you've been like, I'm ready to invest a little bit of money into having a better understanding of what this market is doing, into having a better understanding of how my brain works so that I can build a better strategy to make money in these markets using my brain parts. If it's something you've been considering, now is an excellent time to take advantage of this deal. It's a discounted price, and you get an additional 30% off if you buy it this week. Promo code, Happy 2024. Marketsandmind.com. Thank you guys very much, and we will see you tomorrow morning. As I said, we're trending higher for now, but I have a feeling it's going to run out of steam and go sideways the rest of the day. Bye.